Welcome to Views from the Top, the Arma podcast. I'm John Meehan, a partner at Arma, and I'm joined today by Alexander Tasky. Alexander, thank you so much for joining us today.
Thanks for having me.
Perhaps you can start by giving a brief background on yourself.
Sure. So originally from Toronto, Canada, started out, my first business was actually a car wash. Washed 10,000 cars with my hands, learned how to operationally efficient run a business. We had the vision of having car washes underneath all the financial towers in the city, which seemed like an obvious opportunity. My first passion was actually to go into private equity. So I wanted to work for Carlyle Group, KKR, Blackstone, and was actually lucky enough to have David Rubenstein as my mentor during 2007 and 2008. After many discussions with David, he talked me out of private equity into pursuing being an entrepreneur. So then I pivoted to fintech and payments. And, at the time, this is 15 years ago when it was called financial technology versus fintech. And we started going out to private equity groups, given the contacts. And, the approach was go into a private equity portfolio, go to each company and try to refine their payments. We look at their merchant acquiring, we look at their gateway, we look at their ERPs that they're connected with and make them efficient. So people started calling us head of payments, a merchant broker, merchant therapy in some cases. So we literally met 1,000 CFOs or executive leaders. We ended up signing quite a bit of middle market accounts that were in the unsexy verticals, waste management, recycling, utilities, B2B shampoo distributors, lumber, roofing distributors, all the things that Stripe wasn't going after. And I think that posed a really good opportunity as the market was underserved and there was big volumes. We started scaling quite a bit, and then we took the approach of white labeling through ISVs, through SaaS providers. We then came across AMCS Group, that was we were wanting to partner with. Quickly, behold, they ended up wanting to buy us, which is quite interesting. We're very concentrated in waste management as well as them. After a year of negotiations from the great executive team there, we ended up coming to a conclusion of an acquisition. So we successfully went through a painful process, but rewarding at the end of the day. Full financial review, blood samples, and everything in between. Everything kind of comes out for better or for worse. We went through a transaction which was relieving from an entrepreneurial aspect. Merchant broker was funded all through debt, through loans at 15%. Through cash advances on my Visa, working at nightclubs and bars to carry my payroll at night. But we quickly used our network and residual income to consistently grow. Post-transaction with AMCS Group, we ended up growing at about 140% year over year in the payments. They were valued at approximately $1 billion when they acquired us, and then $2 billion most recently with EQT. So that was a really interesting process to be a part of. Payments added a lot of value, enterprise value to that transactions overall, and got a lot of experience from not only exiting as a founder, but working inside a SaaS company, more to them as a science project initially, but ended up being a very profitable line item on their P&L, and an important part of their business now. So that was good to see.
And what would you say are some of the key takeaways from that exit that you would look to share with CEOs stroke founders today?
I think a large part, and this was from funding it myself, was really hiring really good people that are experts in their domain. To hire 5 executives at 300 grand, 250 grand a piece, it's hard to digest that when you're funding it yourself. It's another $1 million in burn rate. But because we hired a ISV director, it led us to AMCS. I think the other thing to note is really building a good culture. I had a business partner that we ended up going our separate ways, and the first thing that I really did is create good values as a company, taking ownership, communicating fearlessly, driving to be the best you can in your own role. And I think a company is not built on good products and services, it's actually built on good culture. So I think that was a big differentiator that we had.
Thank you. And you look at the payments market. You've obviously spent a number of years around payments. It's been through its ups and its downs. A lot of hype a few years ago, probably more mature at the moment, and going through a certain amount of consolidation. How do you see the payments market over the next 12, 24, 36 months evolve?
Yeah, I think in the last 20 years, you see the QR come out, you see the, Apple payments, pay through your mobile wallet, mobile wallets becoming a big trend. General card processing turned into more integrated payments. I think stablecoins is really the new rail. Zero cost FX, wallet infrastructure, super secure. We've looked into the technology and tried to think about how we leapfrog what's going on today by not using smart contracts. But I think stablecoin rail is a new rail, the last innovation was in 1978 through the card processing networks. ACH and SWIFT was 1973, 1974. Western Union, 1858. There hasn't really been a big disruption since then. I've been personally quite involved in experiencing setbacks when it comes to sending a SWIFT or sending an ACH that no one can track down. When we were going through our sale, coming from Ireland to Canada, the SWIFT wasn't instant. It was expected, I believe, on a Monday, and call it the following Wednesday, it actually hit the accounts, and it would hit their lawyer's account to our lawyer's account to our account, $25,000 later in legal fees. And no one knew where the money was at. And it's still crazy that happens today. We recently met a venture capital kind of interested party, and they were bringing up a processor that was in Turkey that had a T40 timeline and settlement. They were not accepting business because it was negative economics. So I think really stablecoin provides that next frontier.
And if you look, a lot of people sometimes associate stablecoins with speculative trading. What would you say to that, and what are some of the real life examples of how stablecoin can be used, and how do you think that will evolve over the next couple of years?
Well, a lot of people mistaken stablecoin for Bitcoin, which it's not. It's more of the way that money is transferred, and it's backed by a fiat currency, which I think is the best way to go. Tether has done gold, which has some more volatility than a fiat currency. So I think that gives the community overall stability to trust it. I think the other part is having a trusted bank back that stablecoin. So you have a trusted custodian bank, BNY or whatever, JP Morgan, what happens to be. And I think that gives comfort. There's other stablecoins that are algorithmic or that on other things tend to stay away from that. So I think that would be a good response.
And who would be customers today?
Yeah, so I think cross-border remittance companies are an obvious one. FX is slow, costly, and not transparent. I think we're seeing a lot of, call it your traditional ACH company that moves money on T+5, being a back-end provider for, instead of ACH, they keep their systems the same, but they use just more an efficient rail. We're seeing a lot of corporate treasury use cases where, a Coca-Cola or a techno gym that's an international organization move money with all their locations, treasury sweeps, taking advantage of yield. We're seeing also payment processors really want to give that competitive edge of merchant settlement, which I think is another big one. We had a PSP in the US that manages a lot of fuel use cases for all the major airlines, which they're on T+5. And they have a problem with moving money from the distributor, Shell as an example, to their trucks, to their planes, and getting attestations and identity along the way. So I think identity and KYC and compliance has a large part of that. So those are the use cases that we're seeing, and we're seeing more and more use cases come with us day to day.
And you mentioned there a number of established businesses, the likes of Shell, Technogym. How do they react when you start talking about stablecoins? Is there a resistance, or do you think there's an empathy because of some of the issues that they're having with the existing infrastructure that they have?
Yeah, I think what we've been seeing, John, is companies ask us, what should my stablecoin strategy be? Being at Money 2020 and all the payments conferences, people are trying to figure out what their stablecoin strategy is, which is nice to hear. So we see conviction from PayPal, JP Morgan, Fidelity, all these companies really adapting that as a new rail. I think a large part is education. There's misconceptions about the Bitcoin and cryptocurrency and the trust factor there. So I think a large part over the next couple of years is certainly education.
And when for somebody who isn't in the detail of the industry, when you're selling this solution, what exactly are you selling?
I think we're selling a new rail and the opportunity not to, have T+0, zero cost FX, near zero money movement, and the ability to have transparency, reconciliation, headaches gone away. We've also built in native ERP and agentic workflows. So obviously connecting into an Oracle or an SAP is an obvious one, QuickBooks, Sage, all the main ones. So we've already thought of that in advance. So that's what we're saying.
And you mentioned earlier that this is something which is potentially highly disruptive to the industry. The industry historically has been quite slow moving. What are some of the risks with stablecoins that people need to be, or companies question or need to be aware of?
I think the biggest risk, what we considered, is the smart contract risk. We've had.
What's a smart contract risk mean?
It's really a programmable kind of code, if you will, and that is hackable in many ways. But if you don't have that smart contract risk, it's less hackable. I think has been 2 billion of reported losses last year, so that should go to zero.
And if we look at, we haven't touched on regulation, which clearly is an overriding concern of this industry at the moment. What are your views, and how do you see the regulatory environment evolve both in Europe as well as in North America?
Yeah, I think we've seen a lot of clarity from the regulatory framework. Obviously, with the MiCA framework coming out in Europe, I think really set the stage for stablecoins overall. Obviously, with the Genius Act and the Clarity Act making a lot of progress. We're even seeing evolution in the UK and Canada getting stablecoin regulation. Seen some stuff in Japan. So I think the regulation is certainly helping the stablecoin movement, if you will. I think a lot of contributors like Circle or Coinbase are really adding to that. Banks are battling back and forth, but I think hopefully we'll get kind of certainty in the near future.
And do you think that this the regulation is an accelerant for the industry, or do you think it's something which will slow down the progress?
I think it's an accelerant. I mean, obviously, with having clear regulation, innovation can happen a lot better overall. With moving regulation, it's hard for fintechs or regtechs or innovators to really, constantly pivot over regulation. If that was clear, I think we'll see a lot more innovation.
What you've had a successful exit, as you mentioned. You've moved now into stablecoin. What is it that attracts you to the industry so much and brings out that passion and your desire to do it again?
Yeah, it was premeditated. Can you live a comfortable life where everything is paid for and all that kind? Sure. I'm just turning 40 this year, so I have a next one still in my tank. I've looked at a lot of technology in the space because if I were to pick something, it has to be something that is worth picking. Going to payments conferences kind of worldwide and talking to the network. Stablecoin is definitely that opportunity of the century. So I'm happy to put my 150% behind it and make it a success.
And do you think that the investor community understand and see that opportunity like you do, or do you think there's still a certain amount of education that's needed?
Yeah, I think over the last couple of days, we've seen an overwhelming alignment of that vision. We've seen a lot of white papers come out from UBS. We've met with them, very interested. We've had back-to-back meetings of people that really understand that, stablecoin orchestration, issuing from time to time is either looked at as Circle and Tether are dominating, but there's an opportunity for closed loop. Every meeting that we've had has been remarkably quite aligned with what our vision is. And people see Frame as a differentiator based on what we've been talking about. So it's been quite amazing.
And are you seeing much competition at the moment, or is there a significant amount of investment being made, for example, into some of the North American players that potentially is a threat to Frame, or how do you see that?
Um, I welcome competition overall. We've seen great competition from Iron, which got acquired by MoonPay. NOAA, which is an institutional enterprise grade. APIs for stablecoin. I think it's not too crowded. I think it's somewhat modular. When you look at the full stablecoin stack, you see an on and off ramp provider. You see a card issuing provider like Rain. You see a issuer like Circle. But what Frame is doing is verticalizing it in one stack, so it's not so fragmented. And I think that's also what makes us quite different. So I think we're not too early, but we're not too late. We're in the perfect time. And we've seen tremendous volume. I think from 2020 to 2025, it was 20 billion to 220 billion. So it's statistically the fastest growing rail in history.
And what's the vision for the next 3 to 5 years?
I think our vision is really to go after being a white label infrastructure provider to power banks, PSPs, fintechs, enterprise processors to run on those rails, but really sticking to essential industries, necessarily verticals that power the global economy. So I think it's important looking at supply chain manufacturing, insurance, healthcare, just some other verticals. But, going through COVID, you realize that, the consumer retail are not so stable and really focusing on verticals that power the global economy that means something. Critical healthcare is a good example of, there's an emergency, you have to get a payment out that helps the world. So a lot of those verticals, I think, is really the vision.
And what are some of the threats? Is it do you see? You mentioned competition. Is it funding? Is it being able to hire the right people? What are some of the potential inhibitors to reaching those goals?
I think hiring has been a great pleasure, and we get the opportunity to really take our time and hire the right people. I interviewed 15 CTOs and came across Lloyd Moore, that was the previous CTO at Block Demon, that helped scale from zero to multi-billion valuation. And selecting the right people, I think, is the most important part. I think, like I said, the education is the other part. So when you really start to go to market, customers will dictate whether you have to pivot or not. We've collected a lot of information, both from white papers, industry, and customers to know what pain points we're solving. So I think it's really a greenfield opportunity as well. If you think about a SaaS company that hasn't implemented stablecoin rails yet, it's a quick add-on. When you're selling merchant acquiring, Elevon to Global Payments or Global Payments to Chase, you're selling a 50% rev share versus a 60%. It's not that exciting. When you're getting in a new rail and the stablecoin rail is already there, it's hard to switch out for, I don't know, a negative, near zero cost infrastructure. So I definitely think it's a strong race. So I think in part of our raise and the investors, it's how do we get out there quicker, faster, and be the rail that's in there sooner.
And do you think that the next 12, 18 months is all about achieving that critical mass, that leadership position, and really getting the name out there and the scale of the business?
Yeah, I think that's a large part. The other part is making sure our technology and regulatory roadmap is aligned. Without the right licenses, you want to be a trusted provider. And I think in this space, it's really all about trust and compliance and strong security posture.
And are there certain jurisdictions where you want to focus on in order to get that trust?
Yeah, I think from our network being in North America, I think that's a big place to start. And being a Canadian, it'd be great to make an impact in the Canadian marketplace. But expanding into Europe, where I live now, it's obviously a huge network out here as well. So it's a global organization. And the use cases is, where our customers are going is where we want to help the most.
And do you think that stable coins could potentially replace existing rails, or do you think they sit alongside the existing rails?
I think they will replace them in time. It won't happen, I don't think, in the next 5 or 10 years, but I think in 20, 30 years, there'll be less volume. It's almost in payment orchestration, what I learned is, if you can give someone a transaction cost of higher and then with higher settlement time and then continuously lowering it, for example, going from maybe Swift to account to stablecoin, for the customer, it may be kind of invisible. They're clicking a checkout button or they're moving money instantly. It can be as simple as having an instant payment button, not necessarily calling it a stablecoin button. So I think if you give people the optionality and comfort of using Swift and account to account and ACH and give them that extra button, you'll see a slow trend into using more instant payments.
And you look, yeah, as you said, as we said before, you've built and scaled a payment infrastructure business previously. What are some of the lessons that you've taken away from that you're now using in Frame in order to ensure success?
Hire the best talent you can find. Create a good culture from the start and be true to it. Hire and fire and provide bonuses and incentives according to values. I think that's a massive one. I think celebrate the milestones along the way. I think people hold their breath too much to celebrate something that only comes every year or year and a half. Celebrate your first customer, celebrate your 10th customer, celebrate a product release. I think the culture is important, especially in this, remote work hybrid environment. You really got to celebrate that. I think, I'm a strong believer in vision boards and visualization. So I think if you can get your team also doing that, I think it's also a more powerful thing if you do it collectively.
Well, Alexander, thank you so much for a very insightful conversation about a sector which is clearly going through phenomenal growth at the moment, and really wish you all the best as you continue to scale the business and build on new investors.
Thanks very much, John. Thanks for having me.
Thank you for joining me, John Meehan, and my guest Alexander Taski for our podcast. I very much hope that you enjoyed this discussion and look forward to welcoming you to our next episode.